Welcome to Season 2 of Solopreneur Success Strategies. This is Jane Gardner, and we are going to be talking about home business startup. And we're going to be talking about starting, running, and growing your own home business, whether offline or on. Monday is all about mindset, of course. Tuesday is all about starting a home biz. Wednesday is about selling sales and your customer. Thursday is going to be about running your home biz, and Friday will be growing your home business. Saturday is all about putting systems in your business, and Sunday is all about strategy. So subscribe to this daily podcast to help you start, run, and grow your home biz. For more information, go to bo8hb.com. Welcome. This is Jane Gardner, and welcome to Running Your Home Business. Today we're going to start with the basics. We're going to be talking about cash. We're going to talk about your revenue. We're going to talk about your expenses, your income. It'll be quick, don't worry. It's just about getting some idea on what you need to know when you are in business in terms of your numbers. So an aspect of any good business that is simultaneously among the most important and most daunting is number crunching. Business involves number, and if you really boil it down, most business models are essentially just fancy equations. By just taking a moment to look at some key figures, you could immediately increase your daily profits. If you ignore the numbers, you are basically ignoring the potential to make significantly more money. Once you understand how the numbers work, you can see the cogs turning in any situation. We'll be focusing on just 4 key figures, the big 4, numbers that you need to know when it comes to running a business. First off, of course, the most important is revenue. Revenue is an important number to know because it essentially paints the most basic picture of how your business is performing. Profit and revenue are quite similar. Both essentially describe the amount of money your company is making. In fact, if you think of profit as the bottom line, then revenue is the top line. Revenue is calculated by multiplying the price at which goods or services are sold by the number of units or amount sold. You don't take any expenses into account. Gross profit is the amount of revenue you have made minus the cost of goods sold. Net profit is the revenue minus the cost of goods sold and all the other expenses you're making. You could actually make a ton of revenue and not actually make any profit, in which case there is probably a problem with your business model. According to Josh Joffman, author of the Personal MBA, there are just 4 methods you can use to increase revenue. These are: increase the number of customers, increase the average transaction size, increase the frequency of transactions per customer, or raise your prices. Cash flow is a good number to track because it essentially paints a picture of your company's health at any given moment. Cash flow examines the amount of money available to your business that you can actually use. Cash flow is really all about having money when you actually need it, having access to funds at any given time. The term cash flow is closely related to the term liquidity. Liquidity simply tells you how much a company has available in movable funds. This is distinct from the total value of the customer, which will be calculated based on things like assets. Now, cash flow, sometimes you need to quickly do a litmus test to see how your business is managing. This is where the quick ratio or acid test comes in as an equation you can use to work out your cash flow and liquidity. The total amount of financial assets plus your marketable securities, things you can sell, and accounts receivable divided by the amount of current liabilities. This is a useful way to quickly see how much money you have available and to avoid a crisis in cash flow before it occurs. Price point. Knowing how best to price your products is absolutely crucial if you want to maximize your profits in business. Effective pricing is all about knowing just how much value you have to offer. Price it too high, no one will buy it from you because they'll be spending more than they feel like they're getting back. Price too low, though, and you won't be maximizing your profit. So your price point, beside value, which also needs to be taken into account, is the amount of money it is costing you to produce the item, the aforementioned cost of goods sold. This will impact how much you are able to charge for your items because you will know the lowest price possible that still generates revenue. The difference between the manufacturing cost and perceived value will ultimately dictate your profit margin for each item. While there is no hard and fast rule when it comes to calculating price, for physical items, one popular approach is sometimes called the 1-5 rule. You simply take the amount it costs you to manufacture the items, the cost per unit, and then you multiply that by 5 to get the overall recommended retail price that you will eventually charge your customer. Do not be afraid to tweak your pricing. Testing different prices can be an effective way of learning what your market will accept. Expenses. Your expenses are your cost of goods sold, as well as your running costs, your staff salaries, and money that you're putting back into the business. Knowing your expenses and overhead is crucial because it allows you to work out your profit and pricing. Every business and every household even should have a spreadsheet that accounts for every expense and every income stream for that matter. By entering everything that's going in and out of your business into a spreadsheet, you can then create graphs to project how much money you will have at any given point. Be careful though, just because your spreadsheet says one thing, you may not be able to predict things like your biggest client finding a new provider next month, or something like a devastating IT failure. Expenses. Having a very clear outline of all your outgoings and expenses also allows you to easily see where your company is losing the most money. It lets you see how much you could save by making certain changes. Everything you spend money on as a business is an investment, and you're looking to get maximum value for minimal cost. Saving pennies across the board can result in profound changes to your profits. So those are the 4 numbers that you need to know in your business. There's expenses, there's your price point, there's what's your cash flow doing, and then of course there's your revenue. So knowing your numbers is very important in your business, and so hopefully at least you won't give everything to your bookkeeper or accountant, but at least be able to work on knowing those 4 numbers. And we'll talk further about that maybe next week, see what I can do by audio. So those are the 4 numbers that you need to know as an entrepreneur in your business, and to be a skilled entrepreneur and knowledgeable about just how your business is doing. Well, I hope that will give you some ideas to implement in your own business. And if you want more, go to boahb.com and subscribe.